Welcome, everybody, to the Dr. Leadership Lounge, where we have conversations with business leaders from all walks of life about how and why they are successful. Hey, everybody, welcome to another edition of the Dr. Leadership Podcast. Today, we're getting an excited episode of the Leadership Lounge in, and I am very, very excited today to not only have a business relationship on the show, but also a personal friend, a young lady I've known for over 20 years now. Today, joining us on the show is Jayne Frazier, managing member of Scharf Pera PLLC, a full-services accounting company out of Charlotte, North Carolina. And she's joined the show today to talk about taxation from both a business and personal standpoint. And I want to welcome you to the show, Jayne. How are you doing?
Thanks, Brent. Happy Friday.
Yes, it is.
Appreciate the invitation.
Absolutely. Now, you are currently sitting up in the mountains of the Carolinas, where Jayne has a beautiful, beautiful place there, relaxing. So I'm interrupting your early weekend plan, so I apologize, but thanks for coming on the show.
No problem. It's a work day. I've been working from home today.
That's awesome. Now, you just finished, and I'm going to get into some more formal questions in a minute, but you just got done with your mad rush for the year. April 15th has come and gone, and you survived another one. How was tax season?
Survived another one, exactly. It was a busy one this year. It's funny, we actually really have two or three tax seasons. It's a little bit different than it used to be. We have a March 15th, an April 15th, a September 15th, and an October 15th, because we file a lot of extensions.
I have myself in the past.
Yes.
Full disclosure, Jayne helps me both personally and with business taxes, so I know what she speaketh of. So it's you can't get rid of the busy time, but I appreciate you taking time. We worked on doing this last October, and then you got into that just crunch season, and then the holidays caught us, and then I knew not to even ask until after April 15th.
I appreciate your patience.
Yeah. Oh, I appreciate you joining in and coming on the show with us. But I am really excited to have you here. I started, as you know, I do the weekly show, and we kind of started down a financial group of episodes here, and I let everybody know that you were coming on the show, and going to follow up with some 401k leaders at the end of probably June. But really, people need to understand that the IRS isn't the boogeyman, but you got to do some things right, and I want to get into that. But first, What I kind of ask a lot of people is, tell us how you got here today, and tell us about Scharf Pera a little bit.
Okay, I don't know how far you want to go back, so I'll start
you were a demon. You were a demon deacon. That's right. You were a demon deacon at Wake Forest.
I grew up in New Jersey. I went to Wake Forest University for my undergraduate degree, and from there I moved directly to Charlotte, and that was for my first full-time position with Scharf Pera and Company. I started as a staff accountant right out of college. I got some basic, public accounting experience. And after about 5 years, like most CPAs, thought it was time to do something else. So I went into industry. I worked for a real estate developer, and then I worked for a .com, which I'm dating myself by saying that.
Oh, buddy.
But after the changes in the market and the .coms disappearing, I figured it was time to figure out what I needed to do with the rest of my career. And luckily, I'd always kept a great relationship with the founding partners of Scharf Pera & Company. And we started some discussions, and they invited me to join the firm, which I think was part of their succession plan, but it all worked out for me too.
Yeah, it worked out great.
And that was over 20 years ago. So I have been a partner at the firm a little over 20 years, and it's been a great career, and I really enjoy the people that I work with, both my team and the clients. And the most fun of what I do is not the technical part, but it's getting to meet so many different people in so many different businesses with so many different backgrounds.
Yeah, the relationship. It's even true of my business when I'm not doing this voice stuff and this podcast stuff. It is about the people. I mean, we're built for relationships, right? I mean, it's why we
Right.
seek significant others. It's why we have social relationships, etc. But what drew you to accounting? Was it something where you were going through school and it was like, hey, this math stuff works pretty well for me, or what the analytical side of it?
Yeah.
What drew you to accounting?
Well, when I always thought it would just be a general business degree. I really, when I went to college, I didn't really have any direction like some of the
Like
kids
most of
know
us.
these
Yeah,
days.
that's right.
Yeah, back, I went to college to meet people, have a good time, get an education, and figure it out. And I started in the accounting program. The business degree required 2 years of accounting, or 2 semesters, and
Yep.
I just really did well with the classes, and decided to pursue the degree. Wake Forest has a great accounting program,
Hmm.
a great record for people passing the CPA exam, and honestly figured I would just start there and use that as my, jump off point to something else someday. But it just worked out. A lot of people don't stay in public accounting as many years as I have, but it's been a great ride.
Well, and I'll tell you, and again to the audience, we have personal relationship. I'm a customer, and your staff is absolutely rock star. And
Yeah, thanks. I appreciate that.
yeah, and I think well, and you devised the culture, right? You and the original partners that were around when I first started doing business with you. But as the pace of the people is the pace of the leader, uh, just very caring. Great follow up and
Thank
all those
you.
types of things. And what all services does Scharf Pera offer? You offer personal accounting and business accounting. What else does the firm do?
Sure. Now, I'll have to have a shout out to my other three business partners. We have a great relationship, and we all sort of have our own specialties,
Yeah,
but we all have the similar feeling about how clients should be treated and how our staff should be treated. So it's been a great relationship. We're a full service accounting firm. So we offer financial statement attest services, which include financial statement audits, reviews, compilations, corporate tax returns. When I say corporate, I mean LLCs as corporations,
sure.
mostly small business in what we do. We
Hmm.
also are registered with the PCAOB, so we are able to do public company work. We don't really do a lot of it, but sometimes there are companies that are considering going public or getting in that space. And so, because we're able to do that work, it gives them the opportunity, if they ever have to produce financials that are in accordance with the PCAOB rules, we can do those. And then my area is individual income tax, trust tax, planning, and just general small business consulting.
Yeah, that's wonderful, and that's where we really started our relationship. I had my accountant when I was first out in Des Moines, Iowa, was my next door neighbor, who I went to school with his daughter. He was actually the controller for a large dairy, or
Okay.
not a large dairy, a large well, like dairy production. Like all the milk and cottage cheeses and such. It was Anderson Erickson Dairy, and he charged me $50 back in 1990 to do accounting, and then I moved to Chicago and needed to find a partner, and then when I went down to the Carolinas, you and I met when I decided I was going to start a small business and become a general contractor on the side too. And I was a lost puppy, everybody. And Jayne Jayne helped me. One other service you ought to list is clean up Brent Taylor's Quicken books on a monthly basis. I was
I,
awful.
I'll also add psychologist to my other hat, because sometimes I have to have that. I felt like I needed that degree as well.
Oh, and there's no doubt that I was on that couch more than once through all of the thick and thins of the meltdown in '08 and '09 and so on. But you've just been an absolute joy and very concise and given me good direction. So I speak of the firm again. It's in Charlotte, North Carolina. We'll make sure to give a shout out to your website and things at the end here before we stop, so people can look into you. But
Thanks. And I will say we do have clients all over the country. I mean, our most of our business clients and individuals are in the Carolinas, but people move like you, and
you handle Iowa returns,
we
no problem. I can vouch for that.
we generally have had long relationships with our clients. So when they move, we can do everything virtually.
That's wonderful. And it is great because I scan about 50 pages to you and you got a wonderful portal. I mean, they're very high tech in how they do it too, folks. They are top notch. And I've actually referred some friends and some old neighbors that had some
Yep.
needs. And I don't know if you're still working with Dave or not, but it's from years back on he was a software developing company,
Mm-hmm.
and I know he worked with you for a while. But just kudos to you and yours. One of the
Thank you.
things I wanted to bring up today. So coming out, let's start with kind of business tax, because I think you talked about LLCs and S corps and some things, small businesses, and the world has become very entrepreneurial. It was before, but when COVID came around, a lot of people really started thinking, how am I going to make ends meet, make things happen for my own? So you had millions and millions of new businesses being set up. What would you give us some key focus areas around starting your own business, from, kind of tax structures? What's your consulting approach on that? Give us some thoughts there.
Well, my first line that I usually give to potential clients is keep it simple. There are a lot of different structures, but if someone is not 100% sure, they're just sort of, dipping their toe in the pool
Yeah, yeah.
and wondering if it's going to work out. And I think maybe we've had this conversation before. Keep it simple. You can be a sole proprietor, single member LLC, something like that, that doesn't require a separate tax filing. Use something basic to keep your books and records, Excel or QuickBooks or something simple, and just try it. Because if you can always change, you can always add complexity to your structure as you move forward.
Mm-hmm.
But if you spend more time in the operation of the administration of the business,
Oh,
you're
yeah.
never going to make money. You're going to spend so much time worrying about your chart of accounts and what do I have to file this quarter? If you do all that, you're not going to have time to go out and network and
Making
sell
relationships
business
and making money.
yeah,
Yeah.
exactly,
Yeah.
exactly. So I always recommend to keep it simple in the beginning, and
Okay.
that would be a sole proprietorship or a single member LLC. Both can be reported on your 1040, which we're all filing anyway, an individual income tax return. It's just a schedule within your, file.
Yep.
It doesn't require the extra fees of a separate tax return. It's usually very inexpensive. In the state of North Carolina, it's $200 a year to maintain a single member LLC. I don't know, some states maybe less, a little bit more, but to me, that's the simplest structure. And it just requires a P&L. You don't even have to report a balance sheet. So that's how I recommend most people start if they've never had their own business before. If they have a partner or they're going into business with someone else, then it needs to be a little bit more complicated. But if you are just maybe going to do some consulting or do a little marketing or sell a simple product or start a podcast or do something simple like this, a single member LLC is really the best option, in my opinion.
I'll tell you something about podcasts to all the audience out there. It's really good for expenses for the first couple of years.
The tax loss.
Yeah, I've got the losses figured out, and I kept it simple. Maybe I'm just no good at this, but hey, we're turning that ship around. We're gonna show some positive
Yeah.
revenue streams this year.
And
But
and really in
that's
the year
funny.
one, most small businesses aren't turning a profit unless you already have a customer base or you already knew you were going to have a source of income, which is what puts you on track to be an entrepreneur.
My day job was still
Most small
there. That's
business,
right.
yeah,
That's right.
most small businesses have a lot of expenses in year one.
Yeah, and it's kind of, I guess it's the term that's become prolific in the market is side hustle, right? I mean, everyone's
Yeah,
looking for the side hustle and those types of
for the side
things.
hustle.
Yeah, and
Yeah.
it really is pretty simple. You allow me to send a spreadsheet in and say, hey, here's what hit the bank accounts for income, and here's what my expenses were, and then you make all the magic happen. Have you seen a big change in businesses with all the social media and things, people doing, like the marketing and those types of things? Have you seen big, what's the word I'm looking for? Associate marketing and those types of things where people are selling and influencing. Are you seeing all sorts of businesses like that, or
I
where's
don't Yeah, I don't see a lot of that in our practice. Um, you know, crypto has been a little bit more in the seen a little bit more of that. A lot of consulting, coaching, executive coaching,
Yep.
retirees who aren't really ready to retire but want to get out of, they're on their chapter two,
Mm-hmm.
trying to figure out what their next step is. So a lot of the small businesses we see are a lot of professional services, because that's what's in Charlotte. We have a lot of lawyers, accountants, doctors,
Bankers and
bankers,
financial.
consultants,
Yep.
and they're using their expertise in whatever their, business line is, and trying to do it on their own.
Gotcha. Totally makes sense.
My my other piece of advice, for those that are, an entrepreneur, would be to use your network, build your team. And I think maybe
Hmm.
you alluded to this in your last podcast, but, find your CPA, find your attorney, get your banker, or your financial advisor on board, because you don't want to wait to find all those things when you need them, because then they're hard to find.
Yes, it is.
You want to do that up front. If you need a line of credit at the bank for something, you want to buy something for your business, you don't want to find your banker when you need the money. You want to have that all figured out so that you can pick up the phone and call the person, or send them a note and say, hey, I'm ready to buy this, computer system, or this new truck, or whatever it might be that you need. And you don't want them to not know you.
That's right.
So I recommend kind of laying your foundation, making your plan. I mean, you can start your business without all of those, but I wouldn't wait until you need those people to find them.
Well, it's true of anything. It's like negotiations or anything else. You're putting yourself in a position of weakness. It's not like somebody's going to take advantage of you, but it's going to cost you more whenever you hurry something. And
Exactly.
I always say a joke. It's a corny joke, but about procrastination. I used to tell my kids I'm a procrastinator, and tomorrow I'll tell you why. And it's just when you put those things off, you'll either make a decision that's not as good as you could make. I don't want to say a bad decision, but you're not going to be as safe in your discovery purposes. You're not going to take the time to look into it a little deeper, because you're in this mass rush. I've got to get the deal now, or the truck is broke down. You said about the truck. I've got to have a truck running on Tuesday. I've got to make something happen here. So I think that's great advice. When
And
you,
your priority doesn't necessarily equate to that person's priority if they don't know you,
that's
right?
right. That's
So
right.
it's really important to have those relationships, because, if somebody, a client I've known forever, you, for example, call me and say, I need this by tomorrow, I'm going to make sure you have it by tomorrow.
That's right.
You never do that, but if you did,
I
I
usually
don't,
ask for it yesterday.
something like that. I mean, you'll make special allowances for relationships.
That's right. That's right. And you always have done it as before I ever need it. You're so responsive. I appreciate it. And your personal phone call and a text away, and we just kind of clicked in the back, right? It's hey, we're working on this thing
Yeah.
together, and I think that's important. You had mentioned keep it simple, and you can always make changes. And just for the audience, when I first set up my construction business, I did have it was set up. I was married before, and I had we had two people, two members on it, and it was going to require some different approaches to taxation. And I got to you after I had done that. I did some things out of order. Exactly what you're saying is what not to do, right? Get the team, get some guidance before you do these things, so you don't have to pay the fees twice, which I did because I
Yeah.
needed to change it so I could do a simple 1040 head of household, or filing jointly on a 1040 to get that thing transacted. And you did, I said Quicken Books earlier, I meant QuickBooks, but same thing. But then you were very, very supportive in all of that. When, accounting, I would have liabilities in the wrong column and expenses in the wrong column, and you'd clean those things up and send it back to me, and were very gracious about it. I'm sure I was the laugh in the lunchroom there for a few times, but
Oh no, we see all things.
I bet you
Um,
do. It's why we
yeah,
all have. It's why we all have our areas of expertise, right? I mean,
exactly.
that's why you
That's
lean
correct.
on people to do those types of things. What, from a taxation standpoint, you have mentioned don't be scared of the IRS. What do you feel are some of the most common fears that people have about it? How they diminish those anxieties? How do you? It's easy to say don't be scared of the IRS, but how do you bring comfort to people around some of that?
Well, I think some of the things that I always say is just take a reasonableness approach to what you're doing when you're doing your tax filings. I'll hear someone say, "My friend, my neighbor tells me they write off all of these things and blah blah blah," and they also might be telling you a story.
Yeah.
But I don't really care about other people. It's like what I said to my kids. I don't really care about what other people are doing, but I only care about what you're doing.
Yep.
And, I'm going to make sure that we protect you from, making a decision or taking a position for the IRS that's going to put you in a negative position.
Yep.
And, you might pay more than your neighbor in taxes, but I can promise you it's going to cost a lot more if you get audited and they decide to make a change because you took an unreasonable position and they add penalties and interest and all of those things.
That's exactly right.
Um,
And you
I
don't end up in an
also,
orange suit.
yeah, see, now that's one of the fears, Brent. A lot of people think they're going to go to jail if they make a mistake on their tax return. That is a myth. You really can't go to jail for making an error on a return or, not paying something that you owe. Now, you can get into trouble for not filing your tax returns if intentionally disregard your filing requirements.
Sure.
You can get in some serious trouble for that. But if you make a mistake and you owe something, or you get charged a penalty or something like that, you're not going to jail, and they're not coming to knock on your door. You might get a letter. That's about the worst.
I've received
if you
one.
again, yeah, and if you intentionally disregard the IRS, they're going to eventually, get a little more aggressive in terms of trying to collect or trying to contact you. But what I have found is it's better to just deal with it rather than ignore it. It's only
That makes
going to
sense.
cost you more money and it's going to increase the anxiety. And, okay, you didn't file for a year or two. You still have time. Let's go ahead and take care of it. You're going to pay a little bit of late filing penalties if you owe, but it's better to deal with it than to ignore it.
Yeah, it's just one of
Um,
those responsibilities, whether you like it or not. What do they say? There's only a few things certain in life, and death and taxes, right? I mean, you've got to be accountable to it. Um,
Yep.
it's
And the
eventually going to.
IRS really is not an unreasonable organization. They have some antiquated systems and they've had some real staffing issues and
Mm-hmm.
delays and things like that. But if you get in a bind, you had a transaction, you didn't pay enough tax, and you're like find yourself a little short. They have a lot of options. They have payment plans. They have different statuses of things that you can apply for to give you some relief. They give you time. My one word of advice is, though, if you get behind in 1 year, it's really important to try to stay current with the years going forward because you can dig yourself into a big
A
hole if you keep
habitual
letting it
offender.
go.
Yeah, all of a sudden you got a
Correct.
big mountain to climb. Yeah.
And again, it's not like a scary jail type thing or anything like that, but financially it will devastate you.
Well,
And based on your, what we in your last podcast about building wealth,
yep.
it is paying those penalties and interest and living beyond your means, which includes taxes. You have to
Mm-hmm.
take that into consideration when you're talking about what your available spend is.
Yep.
um, you can get into a lot of trouble. You'll never build that wealth if you're constantly paying the government penalties and interest.
That's exactly right. You need the money working for you and not taking your money and working for somebody else with it and
Right.
paying penalties and everything else. And
Correct.
they it sooner or later it's going to get you, and it's just not worth it. The living within your means is huge, right? And I know it. So I have a big customer I've been talking to the last couple of weeks, and it is a multi millionaire or $1 million company now. 50, $60 million a year entity. He started out in his apartment with, 3 HP printers printing some labels on stuff 20 years ago. And his wife was a physical therapist and she was paying the bills and allowing him time to build it up. And, this week he wrote a $2 million check when I called him and said, "Hey, can you pay for it now?" "Yeah, I'll put the check in the mail today." That's a world apart. And it's because he didn't outspend his means. He always has made his obligations be the forefront of it, and good things happen to good people, and integrity and those types of things flow through all of that. If you get on the naughty list once, are you kind of flagged to be watched over more so in the future?
Um, you know, who knows, to be honest. I don't know what the real rule is. I have had recently I did have a situation with a client who, had a random audit type thing, and
Hmm.
then they never would seem to let go. And I'm not exactly sure why. It wasn't a lot of dollars in the whole scheme of things, but um, that was sort of an unusual situation. We don't really see a lot of audits. Maybe one a year, one every other year. Again, talking about the myths of they're adding 70,000 new people
Yeah.
to the I
Yep.
mean, that's over a 10-year period, and that doesn't actually include all the people that are going to be
Retiring.
leaving
Right.
during that time.
Right. Right.
Yeah.
The turnover of staff.
So I'm not, there's not a huge, there hasn't been, we haven't seen any huge increase in, if anything, we just see more delays. But, you know, I don't necessarily, a tax notice or something like that, if you make a mistake, no. If you are audited and you have a real issue, you've again taken some unreasonable position, or you haven't filed for 5 years and they catch you, they're going to be watching.
Yeah.
But if just the normal person who makes a mistake or owes a penalty or pays late, no, I mean, I wouldn't really call that the naughty list.
Yeah, I mean, there's 100. No, there's more than that with businesses. There's probably two, three, 400 million filings that happen a year. It's far more than that. You might know. It doesn't matter how many tens of thousands of people you got. You just can't get through it enough because it's so much data too. It's all the cross
So much
referencing
data
and everything else. Yeah. So
and matching. I mean, I would say one of the important things on your tax return is if you get a document, make sure you report it. They do match up. Um,
they cross reference.
1099
Yeah.
for
Yep.
there are certain documents that can be matched through the computer system, and it'll spit out a notice if they can't match it.
Well,
And you don't
that's
need to be
how. Yeah.
worried if you reported it. It may be on the wrong line item or a different line item than they were looking for, or you may have combined it with another number.
Hmm.
There's usually an explanation, but sometimes they'll spit out a letter.
Yeah. So that's actually it's all come back to me now. I'd tried to push it into my don't ever think about it again part of my brain, but that's what caught me was I had gotten an investment account um, document later than what we had submitted, and they thought that I owed against a cost basis that was not their true cost basis because I'd sold some stuff and they had the cost basis at zero. So they were saying, "Hey, you owe $25,000 in tax." And once I got up off the floor and
Right.
Aaron said,
Jade.
yeah, Aaron quit yelling at me. What have you done to us? Yeah. I said, let me call Jayne. I'll be right back. And you said, it's going to be okay. And we
Yeah.
went out and got online. And you said, listen, you actually don't owe anything. And you sent a letter back with the documentation. It all went away. So, the guys in black jackets aren't out in front of my house, but once or twice a month now. It's not, they
Yeah.
aren't watching me close.
But
So,
that's a real common notice, to be honest with you, where the IRS, you sell a stock and, now some of the brokerages are required to report cost basis on the 1099s,
yep.
but for older stocks and certain types of stocks, they're not required to. So sometimes the IRS only knows what you sold it for, but they have no idea what you paid for it originally. So if that's missed, that's a real common
Yep.
notice.
Man, I'll tell
It's
you
an
what,
easy one to respond to, but
I was shaking opening the envelope and it's all okay. So I learned my lesson and
it's all
that
okay.
it's not
Don't
gonna.
be afraid
It's
of the
that's
IRS.
right. That's exactly right. It's like anything. I always tell my folks you gotta be comfortable being uncomfortable in life, and that's something that you just lean into, and the rest is history. What are there other common issues inside the business community that are a couple tops or inside of taxes that are 8 out of 10 times this is what's going on, or is it all over the board?
You mean in terms of tax notices or
Yeah, well,
just in
tax
terms of
notices
what?
or mistakes being made, a kind of an open-ended question there. But do you see some common things that people just seem to always miss the first time?
Yeah, I would say one of the things that sometimes surprises entrepreneurs when they start their single member LLC or sole proprietorship is the self-employment tax,
Ooh, mm-hmm.
which is a real eye opener. And the self-employment tax is basically the Social Security and Medicare
FICA,
tax.
yeah.
FICA. And it is, when you are self-employed, you are both the employer
Pay
and
both
the
sides.
employee. So
Mm-hmm.
you pay both sides of that. Whereas if you're waged, you're paying half and your employer's paying half. It is assessed on your personal income tax return, and it is it's another, there is a wage limit, just like there is for Social Security, and um, there are some deductions allowed for one half of the self-employment tax, but it is a bit of a surprise sometimes for someone who may think they're in the 20% bracket, and all of a sudden they're paying 30% in taxes, because that other 10% is some combination of that is the Social Security and Medicare tax. So
Yeah.
that is a bit of a surprise for people. So when I'm meeting with someone who's starting out, I usually recommend that you sort of set aside about 40% of your profits. So if you make $10,000, put 4,000 aside for tax, and that usually covers your federal tax, your self-employment tax, your state tax if you live in a state that has state taxes,
Mm-hmm.
and it also might leave you a little extra in some situations, depending upon the income, for a retirement plan contribution, which
Gotcha.
again, as an entrepreneur, self-employed person, you no longer have access to your employer's plan. So you need to be thinking not just about what you're earning today, but what you're going to need in the future. And it is it's a good thing to be doing for yourself as an entrepreneur, is to continue that savings. And so to
Pay
keep
yourself
that in
first.
mind,
Oh
as
yeah.
exactly.
Yeah.
And it is generally a good tax deduction depending upon what type of plan you elect for yourself. But if you make 10,000, don't spend 10,000. We're back to that whole
It's
living
not that
within your
hard.
means.
Yeah, that's
If you make
exactly right.
10,000, you should live on six, and that other four, it it sounds high, 40%, and some people are paying more than that, and some people are paying less. But I have found, as a rule of thumb, 40%
It's
is
going to get you in the
usually
range.
pretty
Yeah.
close.
Yeah.
Yeah, pretty
Closest
close.
to the pin.
Hmm.
And it is,
Exactly.
we work until May, or about now, this time of year of your whole year. Doesn't matter what you're doing to handle the obligations that are going to be what percent of your earnings are going to be taxed. And
Hmm.
it is unfortunate. And then you start spiraling up on, gasoline tax and sales tax and everything else. We're bringing home, 40 cents on the dollar if we're lucky at the end. Do you
Right.
do you have a preference for the entrepreneurial folks on here and the um, side hustle people? Do you recommend? So, can you set up a 401k, or do you just go Roth direction, or how does that get set up normally, or what are those options?
Well, it really depends on how much cash flow you have
Okay.
and how much you're willing to commit. Some of the simplest plans would be, just a traditional IRA or a Roth IRA, depending upon where your income is. Another option is a SEP IRA that allows you to put up to 20% of your bottom line. And in 2024, I think it's 69,000, up to $69,000. So, and it is a deductible contribution. It's a pretty easy type of plan to manage. It's
Mm-hmm.
not costly or anything. There are some hiccups, if you have employees, SEP IRA probably is not a good option, because you have to put in for your employees whatever percentage you
Mm-hmm.
put in for yourself. So it really depends on the makeup of your business, whether you have employees, and how much cash you're trying to set aside. Usually a solo 401k is an option if you are a you know, single member LLC or sole proprietor. That's also an option.
Gotcha. Well, that SEP, that actually allows you to save more than working for anybody else. What's the cap this year? 23.5 or 24.5, something like that, plus your match. But that's not going to equate to that, because you get tapped out, especially HCE, highly compensated employees and things like that get held back. Is that a big advantage to be a sole business owner like that? That seems like a lot more than what is allowed through other means.
Yep. So, I mean, for a 401k for 24, you can set aside 23,000.
Okay.
And then if you're over 50, you get the
Another
option to put in another
7,500. Yep.
7,500. So you got 30,500. And then if your employer is generous and does a profit sharing contribution, they can take you all the way up to that same limit that the
Okay.
SEP has of 69,000. But that you have to be either the employer who's generous or you have to work for a company that has a generous profit sharing
Gotcha.
plan. And so the STEP and the 401k, solo 401k with a profit sharing component, both kind of get you to that same
Same
max limit.
limits.
But
Okay.
again, you have to have the liquidity, the cash
That's right.
flow to
Yep.
be able to fund
To
it.
compensate
But
it and
the
fund it.
nice thing is with a STEP is there's a maximum, but you can put anything in under that maximum. So if one year you can only put in 10,000, you can put in 10,000. If the next year you can put in 25, you put in 25. There's no
Minimum.
minimum.
You don't
Yep.
set a pace and have to hold it. In other words, you can
Correct.
go up and down.
Exactly.
And does that go up kind of
Exactly.
with, it wouldn't be called a COLA, but cost of living increase or whatever, but does
Yeah,
that kind of step up?
inflationary
Inflationary
adjustments.
adjustments? Okay, got it.
Yes, every year generally tweaks up a little bit, 500, 100,000, couple $1,000 depending upon the year.
Gotcha. See, everybody, this is why you have a great accountant. This is just all on the top of our head. I'm sitting here spinning going, oh, wait a second, that doesn't sound fair to me. I'm trying to figure out how to, how bad I'm getting treated, and you talked me off the ledge. I was going to call HR when I was done here for my day job and go, you're not treating me fairly.
Yeah, and if your plan has matching, you're not going to have matching probably in your own plan.
That's right. That's
So,
right. That's right. Well,
if
that's what I was
you are
figuring. I go, okay, 69 back, but they match too. I was trying to piece it all together, but it totally
yeah,
makes sense. Now, from an individual taxes standpoint, right? There used to be when I had my kids were first born and those types of things. You had all these deductions, and we used to get a lot more from a deduction standpoint around home mortgage and things like that. Now, it may all go back to that. Who knows? Because the tax changes during the prior
right.
administration are about ready to time out or be eliminated. But
We
what
call
are
it sunset.
sunset? There you go. Um what are some of the common errors or benefits to an individual? So somebody that shows up and works on someone else's clock every day, what are some of the things that you want to make sure people hear from you today on individual taxes?
Well, I'd want to make sure that everyone is taking full advantage of any employer sponsored type things like matching, for
Mm-hmm.
example.
Mm-hmm.
If they match up to a certain percentage of what you contribute to your 401k, if you can't contribute up to the full amount, at least try to contribute up to what the employer is going to match. That's free money.
It's
I mean,
free. You're right. It's
and
free.
you're not taxed on it. It's going to grow. It's going to compound. It's going to get you where you want to go. So I would recommend at a minimum, you contribute up to the match percentage.
Okay.
Do more if you can, but you're giving away, you're giving away free money if you don't do that.
That's
And I always recommend start early. If you are getting your first job, go ahead and set that 401k contribution high, because you're not going to live off that. You don't ever see it.
that's right.
So you don't it's going to be saved for you. And you'll be surprised how quickly that can add up.
It
And you're not paying
spirals
tax
up.
on those dollars
Yeah, you don't
if
pay
you do
tax.
a
Yeah,
pre-tax
that's
contribution.
right. You pay it
Now,
once you take it out, but it gets to grow with a bigger number. It creates bigger numbers off of
correct.
bigger numbers, right? I didn't mean to interrupt
And
you.
then
So
my other suggestion for a younger taxpayer that's starting out, for example, if you're in a bracket that allows you to contribute to a Roth, and actually now a lot of the 401k plans have a Roth component to
mm-hmm.
them,
Mm-hmm.
and you don't necessarily have to meet the same income limit. So if you have the option to contribute some monies to a Roth 401k, you may want to do that, but also because that's tax-free growth you put in with after-tax dollars. But if you're 25 and that Roth money can grow until you're 65, and then you don't have to pay tax on it when you take it out, you're going to be winning.
That's right. Now I do a backdoor Roth every year.
That's another option.
I have a one. So I have my team. I have the brains of the operation, which are Jayne. And then I have my financial planner that's like my coach and screams through the megaphone, do more, more, more. But he and you help me do this. Talk about the backdoor Roth capabilities, because you can get to a point where income becomes an issue for a traditional Roth if you've got too much there. And the backdoor caps out too if your own IRA has so much money in it. there's some
Correct.
things that, see, I pay attention when you talk to me, believe it or not. I do pay attention. But talk about that for a
So,
second.
so a backdoor Roth is great. For example, if you're an employee, work for someone else, you have a 401k plan, you are not eligible to contribute to a deductible traditional IRA, which is a good $7,000 for 2024.
Yep.
So that $7,000 that a lot of people will say they contribute to an IRA and take a tax deduction for it. If you're part of an employer plan and you have some, a higher income of some sort, you can still make a non-deductible IRA contribution. So you don't get an initial tax benefit for it, but you can put that into a traditional IRA and then immediately have your advisor roll it to a Roth IRA.
Yep.
Now, what happens there is that Roth IRA, that rollover to a Roth, makes that $7,000 taxable, but you have a $7,000 cost basis in that because you put it in with after-tax dollars. So the net impact is zero. You're allowed to get money into a Roth when you otherwise wouldn't be able to because of your limitations, either from the employer plan or your income. And then that money can grow tax-free, just like anyone else putting directly into a Roth. The one thing I would say is you have to be careful is if you have a lot of money already in a traditional IRA, that rollover, when you determine how much of that is taxable, it is spread over all of your IRA dollars. So my suggestion is you do backdoor Roths when you don't already have a lot of money in an IRA.
Right. Right.
You do it if you have 401k, but
Mm-hmm.
not really a traditional IRA.
And that's
You
how I
want
knew
your
that. Yeah. I'm
Yeah.
sorry. Go ahead.
You want your IRA money to go in and go out into the Roth immediately, and you don't want to have a lot of other IRA dollars that you have to take into consideration.
Yeah, we used to do this backdoor for Erin too, and then she changed employers and she transferred her 401k into our financial planner's IRA, and then she couldn't do it again because she had
Well,
enough in
she
that
could
IRA.
do it, but it really wouldn't have been
No
much of a
benefit.
benefit. She would
Yeah.
have paid tax.
Okay, got it. That's what he was saying. He just said you're not going to do it any longer because it must have been the point. But you and Jim Brown with
Yeah.
RBC, I'm going to give him a shout out too, have really been incredibly helpful on financial aspects. Um, when when all the changes happened on the tax, are you seeing that have a positive impact on most people going away from all the deductions and things? You get standard child credits now and you get standard deductions. Did it all kind of plumb out, or did it really favor either side in that? Because you never know. Both sides are lying to you when they're talking on the news from the political pulpits, right? You know they're just trying to fancy it up. Do you think it was a net good thing from a taxation
Um,
policy or not?
a lot more people have gotten, maybe some larger deductions because, the standard deduction is hovering around $30,000 now, right?
Yeah.
So with, maybe not right now, but the last several years, interest rates were lower. So mortgage interest was, a little bit lower. Some people didn't have quite as much mortgage interest. If you're not able to give a significant amount of charitable, you may make a few $1,000s of charitable donations, but unless you're making significant charitable donations, it's hard to get over that $30,000 hump, let's just say.
Yep.
The one thing where people have, I think, been penalized is the state tax deductions that are now capped at $10,000.
Yeah.
I would say that for most of my higher income clients, that has been a real detriment to them, because if they live in a nice house, at least in Charlotte, the real estate taxes, just your real estate taxes, are going to
Adds
exceed the
up.
cap.
Yep.
Or if you have a house and you have a second home or something, before you pay $1 of state income tax, you've already hit your $10,000 cap. So I would say that's been where most of the issues for clients have been in their deductions.
So
Is in the state
federal, and it's not the same for everybody, but federal maybe a little bit beneficial, and state maybe a little negative headwind or. or
Well,
such on?
no, I mean, on your federal return, you're capped at $10,000 for state income taxes, and that includes real estate taxes,
Oh,
personal
I got you.
property
Yes, now
taxes,
I see what you're
and state
saying.
income
Yeah, yeah,
taxes.
yep,
So,
yep.
you if you're paying $50,000 to the state of Iowa in your taxes, or to North Carolina, or mostly it's in states like New York and California where the rates are
Real
much
high,
higher.
right?
Um, there are issues with someone who used to get a $50,000 state tax deduction and now they're getting a $10,000.
I
So
was,
that's a
yeah,
$40,000
dollar
swing.
swing. I was thinking
Yep.
about state income tax filing when you said that. I wasn't connecting the dots. Now I'm
Yep.
100% with you.
Yep. Yep. And so there have been a few things. Several states, including my own state, has implemented something called the pass-through entity tax, which is if you have a business, you're now allowed to pay the state income tax, like an LLC or a
Hmm.
partnership or an S corp. You can pay the state tax directly out of the business now, so that you are kind of skirting that
That rule.
limitation a little
Hmm.
bit. But that's only if you have a business. So if you are employed, and you're paying a lot of state income taxes, it's been a bit of a problem. Some things I've seen some people do, maybe that are probably some years better, taking the standard deduction. What they've been doing is they've been making their charitable donations in one year, in January and in December, so that they itemize one year and then the next year they're taking the standard. So there's been some
There's some
ways to kind of get
workarounds.
the
Yeah.
benefit of both. If you're, close to the line of itemizing one year, you can do some things to push you over the limit in one year, and then the next year you take the
Take the
standard.
standard.
Yeah,
You
but
know,
there's
it's,
not much you can do around that $10,000 cap.
I got you. Yeah. Now I know what you're saying. And take advantage of the tax capabilities that you can. I mean, they're written, it's the law. So don't feel bad about
Correct.
trying. Me, myself, and I want to hold on as many of those shillings as possible because I know the sweat and tears that go into making it. You
Right.
and I
If
were,
it's in the
yeah,
law and you're taking a
right.
reasonable position, there's no reason to not do it.
That's
It's
right.
there for you.
That's
And
right.
that's why I say don't be afraid. Just don't be, I
Egregious.
sometimes use the
Yeah.
word piggish.
Yep.
Don't be piggish. If you
Yep.
think it's too much, it probably is. Um,
There's an old
you
saying
know,
in the Midwest here, and it's pigs get fat, hogs get slaughtered. So don't be hoggish.
yeah,
You can grunt a
right.
little
That's like
bit, but
I
don't
might
be
have
a
to write that
hog.
one down. Yeah. I see that sometimes with auto deductions or home
Yeah.
office deductions or things like that, where there's a little, I'll use the word flexibility or gray area. I mean,
Yep.
most people aren't, if they only have one car, you're not driving it 100% for business,
Yeah.
right? So take it 80%, or, keep your mileage up and track it. You're probably using it more for business than you think, but just, be reasonable.
Yeah. Be fair and reasonable to yourself. So one of the other services, and I just want to make sure I touch on this because we are bouncing close to the hour here that you told me you'd spend with me, and again, thank you so much. But you talked about trust, building, family trusts and estate planning and things, and your firm helps with that. Talk about your feelings around that. Erin and I, my wife and I, are redoing our estate planning right now. As you get older, the estate size changes, and you may want to make adjustments and things. But what's kind of guidance on that for people? I'm a big believer in estate planning and revocable trusts because of keeping the government out of it, avoiding probate and those types of things. But what are your thoughts on that?
Well, right now, I'm not exactly sure what's going to happen when these estate limits are sunsetting in 2025. Whether they're going to go back to some of the old rules or if they're going to keep at the estate tax limits now
Is
that
it
are,
13 a
over.
person?
It's
Was it
like
13?
over 13 million. Yeah.
Yeah, and then if you're
And
married, it's 26 million because you get to pass it on to your spouse.
correct, but only if your spouse files an estate tax return. So you have to make that election, just so you know. You don't just automatically get it. So if
Okay.
you have a spouse that passes away and you feel like you're going to maybe bump up against the double allowance there,
Hmm.
you, even if you file a zero, you have no, everything comes to the one spouse that's still living. You may still want to file, and they call it day sue election, I believe is the correct terminology. You file the return so that it transfers to the spouse, so
Gotcha.
that the spouse would have that. Definitely, I agree with you. You should plan depending upon, where your wealth sits or is
Hmm.
expected to be at some point in the future. Um, Again, some structures can get way more complicated than others. At a minimum, everyone should have a will,
Yes.
so that your wishes are documented.
And a living will,
If
I
you
think, is a good one too. Make sure that,
A
whatever your
living will,
desire, yeah,
healthcare, power of
yeah,
attorney, all
power
of
to
those things.
all
I'm
that
not a
too.
lawyer, but
Yep. No,
having just
yep.
recently been through some family matters like that, I highly encourage those.
It makes
um,
it a lot easier on the people that are
Makes
left
it a
behind
lot
mourning
easier.
you. Yeah, yeah.
Yes. And the a trust structure is good. It's not for everyone, but I do think a revocable trust that becomes irrevocable upon death is helpful if you have a spouse that's going to need liquidity without things going through probate,
Hmm.
etc.
Hmm.
Um, it's also a good structure if you have children who may inherit some of your wealth and may not be, you know, at an age or of a responsibility, mental age, to be able to
Bingo.
handle
Yep.
those types of things. Or if you have a child or dependent that is, may have some special
Special needs.
needs
Yeah,
or
yeah. Hmm.
those types of things. So it is important to understand there's so many options. And
Yeah,
so a good estate planning attorney is important if you feel like you're going to be in a position that your wealth may cause you to have a taxable estate for sure.
yeah. And what people don't realize is they think like mom and dad pass away and their bank accounts just get sent to you. Well, if it's not inside a trust, and appropriate will documentation, everything, the courts get involved, and the courts don't act quickly on anything. And if things need to be sold,
Right.
it could be you may owe. The government puts a ticker on it right away and says, "Well, here's the value of the state. You owe this much," but you may not be able to act on liquidating, to your point, to create the cash that you owe the government. It's a big thing
Correct.
for, in my part of the country, farmland. Lot of value. There's lots and lots of millionaires as you're driving down Interstate 35 and 80 and you're making fun of the guy on the tractor. He's or she may be worth 15 or 20 million dollars because
Not
he
liquid, right?
not
Though.
liquid. That's right. And all of a sudden, if that's not set up right, government comes. Now they do allow you to, the cost basis gets to roll to when that death happens to today's date, but there's all sorts of rules. Get a good attorney. I'm not an attorney either. I just have experience in some of these things, and you're dead
And
on.
I'll also say if you've never planned a funeral before, they're
Oh,
very expensive. And
yes,
so if you
they
don't
are.
have that liquid, if you yourself, or your heir doesn't have the liquidity to pay for that up front, you want to be mindful of making sure that that money is available for things like that.
That's awesome. And then one other question on planning for retirement. We talked about, get the match and invest early and often. And thanks, when we first got on, you said you caught this week's episode and you really liked it. And your 14-year-old son was saying, "Hey, I'm going to start listening to this. This is impactful,"
Yeah, he
which
did.
is
He really did.
which is great. I appreciate that. But I'm getting close to retirement age, right? I'm in my upper 50s, almost at 60s. That's how I feel. I am not actually
Bite your
that age.
tongue.
Yeah, that's right. But is there anything critical that you want to touch on real quick, just about retirement planning? The one thing that comes to my mind is having the good financial planners, so you're paying at capital gains or qualified dividend rates instead of pure income rate on the tables. And that's probably a lot longer than we have for you to cover that. But any ideas around taxation and retirement, how to manage that?
Well, I think one of the things you mentioned was a financial planner there's a lot of models they can do based on, how much money you have set aside, how much money you think you're going to need, and whatever you say you think you're going to need, plan extra
Yep,
because it's never going to be what you think.
yep.
Um, you might need to maybe you buy a new car every few years. Like you
Hmm.
need to include all of those things into your calculations. And the numbers are pretty getting larger and larger of what you need to have set aside to be able to be comfortable.
That's right.
Do you want to live in your same house? What if you need long term care? I think long term care insurance depending upon, what your family health, what you've
History.
been
Yeah.
through.
Yeah.
Again, having been through it with some family members, for some people, it would have been a great investment. For
Yeah.
others, not so much.
Mm-hmm.
So you really kind of have to look at that. But the earlier you start, the
Less it is.
lesser the premiums
Mm-hmm.
are. And you can build, that base of dollars. Health savings accounts.
Mm-hmm.
If you are in a high deductible health plan, you can be doing that now. And if you don't have a lot of health expenses now, if you're saving up those funds in a health savings account and pre-tax dollars, you can use those over age 65 for pretty much anything,
That's
like an
awesome.
IRA.
Mm-hmm.
So, I mean, there are some things you can plan for there. And I would say
Whole life policies too. I mean, is a good vehicle for
whole
people.
life.
Yeah,
Yep, you can
it's
borrow. If
borrow
you build up
against. You can build up
cash,
value.
borrow
Yeah,
against it.
yeah,
No taxation on that.
yeah.
I've also seen some people in years, like, maybe between when you actually retire and when you need the funds to live on. For example, if you've left a job and you've built up enough in your savings, just regular savings account to
Yep.
live on for a year or two, but your income dips significantly. Those are the years you might want to consider rolling some of your IRA dollars to a Roth. You'll pay a little bit of tax, but you'll pay at a lower rate. And then you don't have an RMD on those dollars, required minimum distribution. You can leave those Roth dollars to your beneficiaries and they won't have to pay tax on those money. So there's a lot of things to think about if you have sort of in between that retirement year and when you start using retirement funds.
Mm-hmm.
There are some things you can do for planning.
Because that R
Also,
and D,
considering,
I'm sorry.
considering when you start Social Security, do you take it early?
Mm-hmm.
Do you wait, let it grow later, more amount? The financial planners can work all of that into their calculation.
That's wonderful. Because that R&D thing you speak of, is that where I think it used to be once you reach the age of 72, you have to take the average life expectancy if you're a male or female, divide
It
that.
was 70 and a half.
It was
Yep.
70 and a half.
And then
Okay.
it went
And then
up.
that's, if it's 10 years that you have left, you have to take 1/10 of your
Correct.
value each year the next 10 years. It's mandated to create the taxation pop for the government to get their cut of the money. And it's, it's important to know. I'm not to the age to worry about that yet, but there's
Yeah, and I
lots
believe
of
they
things.
just changed that. I have to double check, and I'm talking off the cuff here, but I think they've raised the age now to 74,
Okay.
73 or 74. So they've given you a little bit longer because more people are
Living
working longer.
Yeah, and working longer.
Yep.
Yeah.
And so, they're having to take money out while they're still earning wages, which puts, which
The double
talk about
whammy.
people being annoyed.
Yeah.
They get a double whammy because now that money is being taxed at a higher rate because they also have wages that they're paying taxes on.
Yep.
So they have, delayed that. One other thing I would consider too for anyone who has some charitable, parts of their life is to consider once you reach 70, you can put your charitable contributions directly from your IRA to the charity up to $100,000. So if you don't need those RMD dollars to live on,
Mm-hmm.
but you have some, an inspiration to make a charitable donation, I do recommend you take it directly from your IRA to the charitable organization because it doesn't show up as taxable income. And if you're already taking the standard deduction, you're not worried
no more
about the
benefit.
deduction.
Right.
Yep. You kind of get a double dip on that because it's not taxable and you still get the full standard deduction.
That's incredible. And folks, this is why you have very strong accounting representation and financial planning and attorneys and bankers. I've always said that. You want a good doctor, you want a great accountant, you want a great financial planner, and you want a great attorney. And if you surround yourself with that team, you're going to avoid pitfalls and you're going to maximize your ability to create wealth and to create comfort. Wealth is freedom, is what I always say. It just, everyone has these dreams of what they want to be when they grow up and what they want to do. But it takes planning and it takes dedication and it takes discipline to do it. And the sooner you establish these approaches and these guiding principles, the better you're going to reach your goal. I remember when I I left my first job and came over to my job, not my job now, but the company now, and I transferred $13,000 in a 401k over. I was 27 years old, and 26 years old maybe. Yeah, 26. And I thought, I'm never going to get there. And all you do is you just keep chipping away, and all of a sudden you look down and holy cow, that was 50,000 2 years later, and then it was 100,000, and then Charlie Munger, like we talked about on the episode this week, the magic number. Work your tail off to get started early, and then let the money do the work for you. Let your accountants drive you towards good decision making and how to disperse and where to put it and how to file it to ensure that legally within the laws you're keeping as many of the shillings as you can in your own pockets. So thank you so much for coming on. So educational. We could go on for hours and hours, but I know it's Friday night and you're sitting on that beautiful deck looking down the mountain range, and I don't want to stand in the way. Is there anything else you wanted to make sure you covered today before we kind of finish up, Jayne? Is there anything else you wanted to make sure you shared?
Well, I think we pretty much covered a lot of the things we had discussed. Just again, don't be afraid. Don't leave it to the last minute. Be nice to your accountant by not bringing things on April 12th. And again, just don't wait for the surprise. Like hit it up. If you get a letter, deal with it. If you know you're gonna need some help, find someone. Don't wait till you need it.
That's awesome. That's awesome. Well, again, everybody, Jayne Frazier with Scharf Pera and Company PLLC, located in Charlotte, North Carolina. What's your website? What's your .com?
Scharfpera.com, and it's SCHARF as in Frank, P as in Paul, ERA.com.
And everybody, I can't give a stronger reference to this organization and to Jayne as an individual. She won't be there forever, but I guarantee you she's got a culture that'll take care of you for years to come. My kids are involved and utilize her, and she's just absolutely awesome, the whole firm. Thanks for joining the show. And to all the guests out there, take this information, take some notes, look into it, look a little further. We can't cover it all in an hour. Hopefully we created some inspiration to go and try to set your family up for better successes. All this stuff leads to one thing. You're going to have an awesome control of your environment and your financials, and then you just keep that shit up. Have a great week. Talk next week. Thanks, everybody.